Hello everyone, and welcome back to the channel where we show you that trading is as easy as you make it on yourself. So tonight, real quick, I just wanted to make this video because first off, the team was like, you have to talk about this topic. It's obviously viral, it's everywhere, blah, blah, blah. But I've been saying for years, and I'm going to say again, you can technically make a lot more money trading your own money, and I'm going to show you that here in just a second. So before we go any further, of course, I'm going to just pop real quick and go through the disclaimer that says everything we discuss on this call is for educational purposes only. It's not considered legal, financial, or investing advice, right? At the end of the day, it's your money, whether you're trading through a hedge fund, whether you're trading your own funds, whether you're trading through a prop firm. You're responsible for the decisions you make. So do your own math, do your own analysis, and come to the best conclusion that works for you, right? Let's take a look real quick. So, of course, we've got some handy dandy little disclaimers, all the other stuff that goes over there. But this is really just a simple spreadsheet. I don't get credit for making it. This was made by a, spreadsheet genius. She is my idol when it comes to spreadsheets, but she made it for our little community, and it's been around for a long time. So really, it was only meant to be something that helps you figure out lot sizes based off of brokers, as well as maintain your risk, maintain your margin level, which we know most people mess up, right? And maintain your overall risk per trade. So as you can see right up here, I've got FTMO. It's one of the, I'm dare gonna say, leading, most longest standing prop firms. Don't quote me, okay? But it's a big one, right? It's been around a long time. It's not one of these Johnny-come-lately companies that have just popped up and is now, of course, underwater. It's been around. So I'm gonna use that for reference. Of course, you guys can go double check any of that information. This information is reasonably up to date. Down at the bottom, you guys can see we've got a couple of brokers. These are a few that we use. Hugo's Way is one that I use quite often for many, many things I do. So as I pop between these, I'm going to show you a couple things. First of all, I don't know exactly what they're charging right now for the $50,000 prop firm account from FTMO. I know they range from a couple $100 to thousands depending on which broker and firm you're using. But we know that you need a VPS, we know that you need services or copier account, you have other expenses, right? So for the sake of conversation, we're just going to round it up to 500 for the discussion of FTMO. To get a $50,000 account, I think it's only a couple hundred or like $100 or something. But to give you an idea, to get a $50,000 account, if we keep all other parameters the same, obviously to maintain the risk that you have with a prop firm, you have to trade pretty small percentages, right? And even that, if your accuracy is not good, is probably too high. 0.25% is probably too high if your accuracy is no bueno. So something to think about, but still, the choices are your own. You can trade up to a couple percent, I'm sure, but at a 5% drawdown ratio and loss ratio on most of those firms, some of them are 7, 8, 10. I think I've even saw one that was 12, but needless to say, remember, you're really only trading a very small amount. So if you have a $50,000 account it looks like $50,000, but the amount you're allowed to play with is technically only $5,000 if what you're allowed to get into drawdown is 5%, right? Well, that's 10% technically, but let's talk for a second. So as you guys can see, I've got GBP USD on all of these. I've got my minimum margin percentage at 1,000. That's pretty conservative in all fairness, right? 0.25% is very conservative, right? Take a look. On FTMO, if I were to use this particular account, and figure this, take it with a grain of salt, it's just for demonstration. But on FTMO, if I was trading a $50,000 account, and this is with 100% accuracy, so just wait, I've got more. I'm going to show you something else too, I'm kind of excited, but I'll show you what happens if you don't have the 100% accuracy here in a few minutes. So $50,000 account, assuming 100% accuracy, assuming a 1.5 to 1 risk to reward ratio. That means my stop loss, right, is 1.5%, right? 1.5 to 1, you guys get the idea. So that means I'm getting 50% more than I'm losing on each trade, right? So 150% of whatever I risked is what I gain on each trade, okay? Assuming that all is the same. Take a look at this. Remember, some of these firms now are like 20 to 1 leverage and 30 to 1 leverage. I'm being kind of generous by keeping this at 50 to give you guys an idea, but I've got it set at 50 currently. So 50 to 1 leverage in order to keep all these parameters the same. There's two things I really want you to look at. Now, take them with a grain of salt. There's some other math that goes in here that I'm not going to go over on this YouTube, but with a grain of salt, the max stop loss at this lot size to maintain this margin level is not very big. It barely covers the spread, right? So we're not necessarily doing that. We're just showing you for demonstration purposes that if you go into any drawdown, you're going to mess up your margin minimum level that we currently have set, to give you guys an idea. So pay attention to this number. Now, all the way down here on the right, remember, whatever you're seeing right here, you're only getting like 80-90% of that, and figure we know you can't withdraw that other whatever percentage, because if you do, you technically have now violated that drawdown rule, based off of how much you're allowed to trade and blah, 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 blah. So don't quote me on that stuff. I am not a prop firm expert. I don't use prop firms. I passed one, or I think I've passed two now, just in terms of a group or just to prove that we could, but it's not my thing. I would rather trade my own money, and here's why. Assuming this cost me about $500, give or take, don't quote me, at least $100. I don't know what they're charging for their $50,000 account. The max I'm going to make on this for what I can withdraw, right, is about $5,689. All the same trades, and that's assuming 100% accuracy, right? And that's only in 36 trades, to give you an idea. Now, most of us don't have 100% accuracy. On a good week, maybe. We have some good runs, but overall, we don't have a consistent, forever 100% accuracy. So this is all already subjective to begin with. But pay attention real quick. This is FTMO, and there are other ones. They have different parameters. Put this kind of concept into whatever the parameters are for the prop firms you're looking into, and take a look. I maybe, baby, be able to profit $5,689, approximately. Now let's go back to Hugo's Way, okay? On Hugo's Way, remember, I had $500 of my own dollars in there. Let me zoom this in a smidge so you can see this clearly. $500 of my own dollars. Cool. My leverage is 500. My minimum margin percentage that I really want to keep track of is 1,000, right? I'm trying to keep it above that, so I know I'm in a good risk parameter. I know I'm not over leveraging, and I have zero risk of being a margin call or anything along those lines, right? I'm in a great position. All the same parameters, assuming I'm going to make 150% on each trade that I make. So if I lose 100, I'm going to make 150% on the risk that I took. So it's a 1.5 to 1 risk to reward ratio. That's our stop loss and our pips. Check it out. Look how much we made on our own account. So technically speaking, I can literally make more money trading my own money with less hoops to jump through, with less rules, with less regulations, with less, oh my gosh, you fell out of the window, or today was Friday and you weren't supposed to hold, or all the other criteria that they make you do. Now, I'm going to say I'm still a very, 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 very big advocate of you are responsible for holding yourself to those standards. The benefit of a prop firm is what? It holds you to a different level of standards, and it's accountability. But if you chose to, you could hold yourself to that same level of accountability. It's not easy when you have no oversight, when you have no one else who's going to say, Eric Thomas level, you let you down, right? It's up to you to do it. But other than that one benefit, and there's some good tracking software, although that's easily replicated on other platforms, there's really not a huge benefit overall in trading prop firms. It feels really nice to trade a 7-figure account, but if all you're gaining from that 7-figure account is $10,000, was it really worth it, right? We can trade and plop in different numbers to each of these, so let's go ahead and bump this up a little bit. Let's say we trade our own $1,500 account, okay? And then we're going to go over to one more spreadsheet just to show you something. Our own $1,500 account, that's approximately, again, assuming the perfect ratio, which we're not going to have, assuming a 1.5 to every one, we're not going to have that either, but that's about how much we're going to profit, give or take, okay? I know there's other variables, there's spreads, there's swaps, there's other things that go into this. This spreadsheet does not account for those things, okay? But take a look, $1,500 on a prop firm, I don't know, I think $1,000 buys you, we're going to say $150,000 because we tripled the other one, so we're going to triple this one, okay? $150,000. Let's go up some bigger numbers because they say, well, hey, wait until you get to bigger numbers. Can you technically, make your money back that way? You sure can. But that's what brings me back to my next point. Because you have so many rules and criteria you have to jump through, the max amount of room you're allowed to give your trade, if you're still trying to do 0.25% per trade, is still substantially less than what you would have on your own account. And that's due to leverage. That's due to how much leverage you're having access to by trading on their prop firm, by trading on their fund. You're having less leverage, that now you have less access to more room for your trade to breathe, which means probability-wise, right? If I take trades on my live account and the same trades you took, but I'm allowed to give mine a bigger stop loss, right, without having to worry about blowing my account from a margin call or going below my minimum margin percentages that I set for myself, that means the probability of me winning my trades versus you winning your trades is substantially higher. So I had to talk about that real quick. Of course, I think it's a super relevant topic. And for all the you people on YouTube who are following, first off, thank you for your support. Thank you for constantly chiming in. I would just ask you to look at one more thing. So also, this was not created by me. I am not that cool, but it's really cool. Hold on. In my dreams, I'm a spreadsheet expert, but today I am not. Today I am not a spreadsheet expert. Let's see. But I do love them. I have a love affair with spreadsheets. I always have for a long, long time. All of those, and then I'll unhide them later. I'm gonna, hide these two. Hide those two. I'm gonna hide all the mess to get it out of the way. We just kind of do these little calculations to kind of show stuff during discussion. Let's go over those same two simulations that we did, but using something called a Monte Carlo simulation. What this does is it makes your wins and losses fall in a randomized order. So sometimes you might have a couple losses in a row. Sometimes you might have a lot of wins in a row. And these all fall randomly, right? You can't control that in real trading. We think we're a guru, we think we're an expert, but we can't control that. So let's use the same parameters we had previously set. $500 based off of 5% risk, okay? Assuming, a lot of our accuracy I think is 85%. I think we can agree to that. I mean, that's pretty reasonable. Our current class accuracy is around 90, a little bit less this year, but pretty close, right? And those are live trades to give you guys an idea. But 85% accuracy is doable, and we'll lowball that here in a minute. Assuming we have a 1.5 to 1 risk to reward ratio, okay, I'm going to hit F9, which is going to make this whole spreadsheet recalculate. This spreadsheet is based off of 62 trades to give you guys an idea. So you don't even need to see this number because that number is the same as this number. And as I keep doing that, so I'm going to hit function F9, watch what happens. So remember, your wins and losses fall randomly. You have no control over that. But I'm going to hit F9, F9. See that 23,000? That's the same 23,000 here. So I'm just going to keep this scrolled up. We don't need to see that. But because you don't know when your wins and losses are going to fall, you don't know if they're going to fall on the heavy end on the beginning or if they're going to all be at the end where, oh my gosh, I lost 7 in a row. So that's going to equal a much lower number in terms of how much your actual results were at the end of 62 trades. But let's take a look at what this actually equals. And we're just going to take the middle number. I'm going to hit F9 a whole bunch of times. We're going to take that middle number and I'm going to show you something. So with these statistics, $500 account, 5% risk per trade, winning about 85% of the time at a 1.5 to 1 risk to reward ratio. Remember, this is not factoring in stuff like spreads and swaps and commissions and the other parts of trading. This isn't factoring all that in. So take it with a grain of salt, okay? Check this out. I'm going to hit function F9. So we got about 10,000 to 23,000 on average. The lowest was 4. And I think the highest we have seen 27. Let me slow down a little bit so YouTube can keep up. So figure on average, we could safely say about 14,000. The highest is 30 now. So on average, in 62 trades, provided that was your accuracy, you could have made about $14,000 that you keep, okay? Now I want to show you something. We started off the example on that last spreadsheet with what? So we agree about 14,000, kind of mid-range between 4,000 and 30. I'm going to take that number. You can make it a little higher, a little bit less, but that's your potential projected profit based off of an 85% accuracy rate. Now watch this. I'm going to take 50,000. Okay. Same numbers. 0.25%. Okay. 85% accuracy, 1.5 to 1. So this isn't worrying about all the minimum stop losses and everything else. And remember, you're only getting 80% of that. Now take a look at what's possible with a prop firm. If you have a $50,000 account, remember we've already established it costs a couple $100 of your own dollars, right? And you're trading it at 0.25%, 85% accuracy, 1.5 to 1 risk to reward. I'm going to do the same thing I did. Now this calculation, it took me a second to get here, is this, okay, subtracting this, so all the profit, right? So it's just the profit, which in this case is about 10,000, 80% of that or so is yours, right? Give or take. Check this out. I'm going to do the same thing I did before. I'm just going to bounce around to see what the most you could have made is across the board. That's kind of crazy, huh? So all we're doing is taking the actual profit. Now, do you see any of those numbers getting close to 14,000? Any of those numbers getting close to 20 or 30 or $40,000? No, you do not. That's the difference in a prop firm, in my opinion. Now, I don't think it's bad to trade and to become an IRA or to become an investment advisor, to work for a hedge fund. I don't think any of that is bad, or building a hedge fund for that matter. I think there's values in all of these different directions some of us are going. I just want people to understand that trading your own money still maintains a higher potential profitability than trading through a prop firm. And as fancy as they look on YouTube and as great as it sounds, they're not necessarily the best way to be. So this is about what you can expect. Figure 85% accuracy, Remember, about 80% of that profit is yours, because we have to only go off of the profit, right? The actual profit, not the original balance, okay? The actual profit of that is not as big as people think. So just something to think about. And the biggest difference, here's where the biggest difference still remains. As your skill set improves and we go back to our own money, okay? What did we do on the second ratio? We did 150, right? 150. You have 150, 1500. So we did 1500 on the second example. As your skill set improves, you don't have to trade 5%. You can have a grow it or blow it style and say, hey, I'm going to really see what's possible. You can say, hey, my accuracy is good. I'm going to do 7%. And then here's where the other part comes in. We have all these simulations that I think people are missing. They're missing the main thing is the main thing. If I go back to this, I can afford to have a smaller winning ratio to say, hey, I've had a rough month. I had stuff going on in my family. I'm still profiting a fair amount. If I do that same thing, and let me just hit F9 a couple of times, okay, I'm still profiting, between $4,000 and $10,000, with the highest being 14. Just watch it change, watch it change. Keep your eye on this box, ladies and gentlemen. Cool. But now watch. If I go to a prop firm, that same concept, $5,000, and I'm only doing 0.25% risk, and I'm keeping it at 75% risk, you're trading for an entire month and you're not making very much. You're not making, and not to say that's nothing, because it's, money is money. But take a look at how much actual profit you're going to have on a $50,000 account. In this case, remember, you're looking at this box, okay? Take a look at that. That's not something that's too much to write home about. And most people have an accuracy much closer to this. Most people have an accuracy way, way closer to this than they do 85 and 95%. So they're trying to get these huge numbers thinking trading a $500,000 account is going to be super profitable. It's not more profitable. If your accuracy is still not very big and you can't increase this and you don't have room for a stop loss anyways. Those are some of the biggest reasons why I don't feel super strongly in terms of prop firms. Not to say that they're a bad way to be. There is a benefit. They hold you accountable, number one. And number two, some of them have some pretty nifty tracking software. Other than that, those are all things that you can technically provide for yourself if you truly wanted to become an independent trader. So here's our Tuesday night video, guys. I'm super grateful that you guys all took the time to watch this. I hope that some of this is helpful. If you have comments, questions, or anything along those lines, please do let me know. We're currently quasi trying to run a challenge publicly. I know a lot of people have had some difficulty in terms of posting that, so I will be meeting with my team in terms of how do we correct course. So there have been a lot of messages in terms of people trying to post an image and YouTube won't let them, or the social medias won't let them. So due to that, we will correct course. I don't know exactly what yet we're going to offer or how we're going to do it, but I will make it up to people one way or another. Because ultimately, all we're trying to do with this challenge is show people that trading is a skill you can give yourself that no one can take away from you. Trading is a skill that you can eventually get, and for some people it comes quicker, some people it comes longer, and there's a lot of stuff that you got to learn and understand along the way, but it's something that no one can ever take from you. You can pass it to your children, you can pass it to it can pay for your hopes and dreams and all the bleeding heart, things that you feel in your heart that you really want to be spending your time and money on. It can do so much in your life if you learn this skill. So trading your own money, in conclusion, is still, I think, the most profitable way to be. Hopefully this helps you. I hope you guys all have a beautiful day. Happy Tuesday, and God bless.